Hey traders, welcome to another edition of the Crypto Lab with Alex, featured by Trading Analysis. So as usual, we are going to go into macro themes a little bit more today than usual because I've seen some changes in couple of things. So I will show you that, and of course then we will switch to cryptos. And I will show you what I think what is going to most likely happen with the Bitcoin and Ether. So you can leave your comments and requests for a couple of charts in cryptos in the comments box. So let's dive in because we have a lot of subjects to talk about. And I will first start with market perception of the latest comments from the Jackson Hole and Jerome Powell. Of course, we have seen comments from the Kuroda, which is a central banker from Japan, and a couple of guys from the ECB as well. So we are going to go through that first, and then we will switch over, of course, to a couple of macro charts and then cryptos. So let's dive in. I will start with CME Fed tool. Usually we look this as a probable outcome for the next Fed rate. There is a couple of things that we have ahead in regards of data. So tomorrow we have an NFP, and in a couple of days we will have the new CPI data, which can affect these probabilities, which we are going to discuss here. So as you know, Fed next meeting is coming on 21st of September, and currently the 75 basis point move has been gaining a lot of traction in the next couple of days. 72% that Fed is gonna hike rates 75 basis points, 0.75 basis points. So we are looking for a 50 basis points move falling down from the last couple of views that we had to 28%. So this also can be changed if we see the CPI data lower, which I think it will. So we will see the recomposition and probabilities then. But even if we go 75 basis points, I think that the market has already priced that in around 3.325. So what is interesting, on the 2nd November, we have seen this neutral stance from Fed, actually from 25, even 30% falling down to 1.8% probability. And then, of course, the highest move again, starting to considerably grow to 67.3% after the Jackson Hole comments. So as you can see, market is starting to align itself with the most hawkish Jerome Powell comments. There is a couple of things we have discussed that on yesterday's stream where we cover stocks. Also a little bit of macro. We had our founder Todd Gordon with us, so I will strongly advise you to look that. You can find it on our YouTube channel, and you will see there a good discussion how do we see possible narrative of the Fed moves further or follow up, because we did all agree that this is just a little bit overshoot, and some strong comments are possibly just a narrative move from Fed, not actual that are going to do this type of hikes in the future. So that's our view. I will show you why do I stick with this view, because I see, and that has been the theme of this crypto lab on the macro side for many months behind. We are seeing many commodities lower, and they need some time to actually show into the official figures, and nothing has changed much on that front. I will show you a couple of commodities charts and Thomson Reuters index, which are actually are unfolding according to our view. So let me start and show you first chart, which is a 10-year yields. I do track on many charts this monthly RSI. What is interesting in this chart, this is the 10-year yield. we are seeing the highest RSI reading on the monthly level. This is really a big time or a big time frame. This is almost 40 years or 40 plus years of rates. And as you can see, we didn't see this high RSI reading on the monthly level. This is actually the first one at 75.60 before. When we see these drops, they were considerably lower, around 69 range, so not in the sphere of 74, 75 levels. So I do think even if we go on a smaller time frame, when we see some divergences, that actually we are going to see a little bit more upside in rates, and then we're going to see a smaller or a larger pullback in the months to come. Maybe this will unfold until the end of 2022, because the rates are moving in a slower pace than the other asset classes, and then beginning of 2023, maybe we can see a reversal to the downside and a pause, which will align with other of couple view on the S&P and Nasdaq that we have. If we move further to the European situation and 10-year bond, this chart is going according to our previous view. So we have been looking for a possible move on the upside post this fourth wave nice channel test. So if we look the higher time frame, we will see that this is the actual channel from the last 40 years of the rates on a 10-year bond. Kind of a nice kiss of this channel line, upper channel line, and then we continue on the upside. The ECB guys on the Jackson Hole was also hawkish on the rates, although the European situation is much worse in many aspects of the economy than the US one. So I don't think that ECB has such a propensity to move rates in a pace that the Fed is doing. So we do think that this will actually trace out the 5 waves, but with a lag, as opposed to US counterpart. So we do see this unfolding a little bit later than in the US, but nevertheless, a 5-wave move from these lows will actually suggest that after a pullback, we're going to see a further inflationary development on the upside. But there is much more time left to that, so economy can adjust. So we will go one wave at a time. So for now, we are going to stay bullish, with a caveat that potentially the intermediary wave 3 is finished. We had intermediary wave 4, so primary wave 3 is unfolding now, most likely either a directional or some type of a consolidation. Then we're going to see a move down, and then a final push up in this 5th wave, which will mark then an impulsive development from the lows, which suggests we're going to have at least one more push after the corrective pullback on this 10-year bond. So if we look dollar index, also if you look this monthly chart and the RSI, you will see this is the chart from 1968. Post Nixon announcements that US is actually canceling the Bretton Woods agreement. So you will also see that we have incredibly high RSI reading on this monthly level. We also have a couple of fib levels. The nearest resistance comes around between 112 and 114, and I think we are going to stop there. Even if you count this as an ABC, X, A, down in B, up in C for a Y wave in the Elliott Wave terms, we should see a significant correction in both wave counts on the US dollar index. I've seen this to correlate with the many charts on the FX that we are tracking. I really don't think that US dollar or the DXY, which is a composite of the dollar against the 5 major currencies, I don't see it 120. I do see we are reversing much earlier than 120. I just don't see technically there is too much of a strength left for the dollar to continue this rally on the upside, looking all of these metrics. And I do think that we're going to reverse slowly and start to accelerate to the downside, either in a smaller or a bigger correction in the dollar as we move ahead. So I'm going to stay slightly bullish on the dollar just for the very temporary time being until we are getting close to this zone, and then I think we're going to reverse first slowly, then more aggressive to the downside in the dollar index. So let's go revisit some commodities. So Thomson Reuters index are actually functioning also in the Elliott Wave script that we are tracking for the last couple of months. We have identified a clearly very nice 5-wave pattern on the upside. 5 waves down in A, up in B, maybe B is still not done. Maybe we're going to have a little bit more upside, but definitely this looks corrective. So we do see commodities starting to push lower further, which agrees with our overall outlook that rates might actually turn as the CPI goes lower and the Fed actually starts to be a little bit more softer on the narrative, at least for some time, for pushing so strongly rates higher. There is also a majority of a debt issue in the world. As you know, lots of the things in the debt sphere actually is using liquidity to refinance the existing debt. So debt to be done on such a high rate is almost unimaginable. So I think that actually Fed will soften its stance in the next meetings, and we are going to see rates moving lower slowly post 5-wave sequence that we presented. If we look oil, you know my stance on the oil. I look this higher time frame chart. I do see this possible correction extending further lower and then continuing higher. I don't think this is a 5th wave truncation in oil. This is the wave 3, this is the wave 4, this is a very large time frame, and I do see a 5-wave sequence unfolding for almost 150-80 years on this chart. So if we look the whole chart, you will see that actually we do miss a 5th wave on the upside, and I will show you the whole chart. So the wave count that for the data, which are pretty long, that we have here on a trading view, actually depicts some type of nice Elliott Wave pattern on the upside. We are able to identify the wave 1 and 2, a nice development on the upside in 5 waves, then a post A triangle B thrust to the downside, and now most likely we are developing the final sequence, which will take pretty long time to develop on the upside, because this is the larger time frame. So I don't think, looking many things on the oil market and the situation in the world, I don't think this is the actually double top or a truncation of the 5th. I do think that oil will continue after a pullback higher, and we will be facing, according to all of these other charts, that we are looking for just a pullback in rates and continuation higher, that oil will be one of the drivers in the year or year and a half of these rates on the upside, as is it now, one of the among chief features of the inflation higher. So I don't see this is actually as a sustainable reversal. I do see this as a correction, and post some time, I see developments further higher in oil. If we inspect some other commodities, everything is reversing on the downside. This is the soybean. So the chart clearly depicts a 5 waves up and a pullback in progression. If we look at wheat, we are trading almost in a 5-wave sequence post February, March highs, which actually marked the high levels on wheat, where we actually was a bit in a panic because of the Russia-Ukraine war, because both of these countries are major suppliers of wheat in the world. Also, if we look corn is also having a 5-wave sequence from its highs, and most likely B wave is done or has a little bit more on the upside, and we will see more downside prices on the corn. So if you look this couple of soft commodities and oil, and also we can inspect the net gas, we are holding this level. So I'm still not sure, are we going to continue higher or we're going to do still a temporary fourth wave pullback, because you can count 5 waves up, including this low, because it doesn't overlap this as a flat in a wave 2. So I'm still juggling between a couple of counts. I do see net gas prices considerably higher, but only when this fib level clears out, which we don't have for now. So I can play with this, put this here, a wave 3, still expects a wave 4 pullback. So I will see, this is still not a clear situation for me, so that I can decisively take some bias on the net gas chart. So I'm still going to leave this open for a couple of possibilities. But in general, if you look all of these commodities, you will see that they are trading lower and the prices are lower in the world market. So that will definitely, we will see that in the CPI in the weeks to come. And also the Thomson Reuters index definitely points out to a possibility that we are going to see lower prices ahead, which has to put the CPI down, especially if we see food and energy from all of these aspects to be a main component and drivers of inflation. They will actually be, for at least the time being, sustainably lower for a couple of months at least. So that should actually provide a lower CPI in the months to come. Our view overall will stay bearish on commodities, and also we are going to look for a little bit more upside in the rates, a little bit more potentially upside in dollar index, and then reversals in all of these asset classes in some pause or a move lower for at least let's say next 6 to 8 months on this outlook. So let me just go and I aligned that to show you S&P and Nasdaq. So we have been looking for a continuation of this trend on the upside. We still don't think this is a beginning of something drastic on the downside. We still look a couple of options, and we are facing with some wave count invalidations which we need to address. So usually in the Elliott Wave sequence, when you have a 5-wave move, one of the rules that the wave 4 cannot overlap the wave 1 except in a leading or expanding diagonal. So we are very close to that. And in the case of wave count invalidation, this still has time to be some type of a triangle, because the E wave will not invalidate the wave A, but I think we will have that resolution today and very soon. In the case we do invalidate this one, we will have to take into consideration that the S&P will after some time continue lower. So in that respect, we have to form a complex correction, either X finishing here, or which I think it's more appropriate that X is usually going to finish in the line with the previous B wave. X waves are pretty tricky because they put markets on the wrong foot and give the wrong picture. They're usually also in a complex or a simple 3-wave sequence, and in this respect, which I think is going to happen, is we're going to test this B wave, which is the usual and most likely target for the X wave to actually confuse the market participants. So in that case, this will turn a little bit more complex on the upside. So we will have this as an ABC. This will be in an X wave, which will invalidate the immediate bullish case. So this will be WXY, and then we will roll over and actually post another low on the S&P, Nasdaq, and a couple of other indices. So in that respect, we have to a little bit change our outlook on cryptos. You know that usually I have 2 outlook on cryptos, but I have to introduce, looking all of these changes, a potential more bearish scenario on the Bitcoin and Ether, which I think they might unfold, all dependent what will happen here on the indices and of course on the SMA chart, which we track as one of the very good correlation pointers what will happen with the price of the Bitcoin and cryptos. So on the SMA chart, which has a good correlation with the Bitcoin, we do see 5 waves up, and that will actually align with the possible move on the upside, reaching this proposed X wave, which I just explained on the S&P. So that will be some type of a 5-way move. This will be a flat correction to the downside, and then one more push up, which will actually post a correction in respect of reaching the same feature and actually put this SMH lower, which can actually be another move down in crypto. So I need to start looking for that option, because when we see these options and reality of the current charts, it gives us a pretty mixed picture. It is not so directional, and especially with these wave counting validations on the S&P possible, we have to start and be prepared for a possible, I would say, just a slightly bearish scenario that might unfold. So let me just go quickly on crypto, before I go to crypto, on gold and silver. We have a new lows on silver. So silver didn't achieve to post a higher time frame confirmation of the lows. So I still do see this approaching. So I still do see silver starts to trace out some of the larger confirmation on the upside. This was a failure, and I do consider this to be a 5th wave on the downside, because there is no wave counting validation here. Usually these bigger wave 4s you can see when some of the trends on the downside completes. So I do still view this as a bullish outlook with some of the targets that I proposed earlier. And on the gold chart, we still didn't actually invalidate the bullish wave count, but we still don't have a higher time frame confirmation. Okay, so if we look the chart, we looked at this big potential flat on the downside. We are now reached the last resort levels, 88.8% retracement. So gold needs to go and actually trace out very quickly 5 waves up to actually give us a confirmation that it wants to go further higher. In the case of a break of the previous low, we will have to change this chart and actually consider this to be just a slightly more bearish one, with the targets not far from the current target, just a little bit below, and then we will seek also for a higher time frame confirmation. So why I do insist always for a higher time frame confirmation, it's just because of these situations where actually you will see market test these levels. If it doesn't give you enough of the confirmation that you can look further on the bullish development, you of course have to either manage your risk if you are already in, or actually wait another confirmation on the upside for a possible trade in the bullish scenario. So on these metals, of course, I think most likely the main market which we need to look is US dollar, because they do function in correlation. I think especially metals. While we did see commodities in this environment and the dollar index goes together hand in hand on the upside, at least a couple of weeks before, but now we are seeing commodities down, dollar up, so maybe this correlation is starting to get even, but we will see that as the times goes by. So I do see these charts on the upside as long as I see dollar starts to actually back off of this range and starts to go further lower, which I think it's going to happen very soon. So let's switch to cryptos and let's look the current development. Total crypto market cap, we still don't have any confirmation on the upside. What I will introduce as a possible change if we don't continue further on the upside, my next best case scenario will be that this is a probable flat on the downside, and I will also exercise that on a Bitcoin. I think it's too early for me to become super bearish on cryptos. I think many of the sentiment on the upside is not so. I like to go step by step. I don't want to take a stance. At least I don't see some wave counting validations, or I don't see some more stronger signs of the downside development. So in my worst case scenario, looking all of this environment that I showed you, will be actually that this is still a bullish outcome with the 1-2 up in 3, flat in 4, lower, and then 5 on the upside. So I'm not abandoning the bullish wave count either on the Bitcoin or on the total crypto market cap. I'm just seeing in this environment, if we start to break lower from the proposed X wave, which will be the 4th wave on the total crypto market development, I see a possibility while the S&P and SMH with Nasdaq to go lower as a possibility, one more move down in a total crypto market cap. After I will seek a very sharp recovery on the upside, at least in a first 5-wave sequence. So this is a real possibility now. Looking all of this environment, we don't have a new low to confirm that, but I will carefully look what's going on in this 4th wave. If we, of course, invalidate that on the upside, we have to switch back to triangle or a more bullish explanation, but I don't see that event so probable in the current environment. If you look and if you pay attention of all what I've said, looking at the development on the stocks, Bitcoin is still behaving as the high beta risk assets in the Nasdaq. So we have to track these cryptos, unfortunately, still in line with the events on the stock market. Maybe we are going to see some decoupling when we see some identity return to Bitcoin, because my case was that Bitcoin actually has lost all of the narrative that we have heard in the last 2 years. It is not store of value, of course, at least for now. It is not muchly or widely used as a currency yet, and it is not definitely an inflation hedge or a pristine collateral. So all of the features are most likely temporarily lost. I've already mentioned that Bitcoin has a little bit of psychological issue and maybe needs a psychiatrist. It's just an internal joke. But we don't have actually this whole narrative confirmed on the Bitcoin, which has been my statement for already year and a half, that we are facing this kind of a pause in the Bitcoin function in the world. That is, of course, not standing at all for Ether, which has a kind of a use case scenario, especially with this merge and proof of stake coming. But again, it will be also affected by all of these possible moves on the downside, and that's why I'm introducing this for a worst case scenario in the current environment. And if this environment prevails, most likely we are going to see this unfolding. So let me go to Bitcoin chart longer term. So as usual, I'm going to show you what I think it's going on, and it will be the same as I depicted on the total crypto market cap. So I'm not going to turn bearish because of the possible one more leg in the stocks. So wave counting validation and the rules are pretty clear in the Elliott Wave. Looking at the macro picture, I always try to put that into the context and tie these two together. So wave counting validation for the Bitcoin comes around 13,826, and until that line is crossed, I don't see any reason to change my outlook, especially tie that with possible one more move lower. So I will consider in that case, if we see that a little bit more upside on the Bitcoin, which will be the X wave on the S&P, and the move down, which will produce the fifth wave on the downside, which actually means potential lows between 15 and 16K, and then a turnaround on the last sequence, actually the fifth wave. And let me be clear, I do see cryptos going potentially lower if we don't see a change in narrative after this fifth wave is done. So our longer term wave count do imply a sizable move down in stocks and cryptos, but not yet. We still have, I think, lags on the upside, and until we see the wave count validation, I will not change the opinion, and I will not actually back off from this possibility. Either in a case you have only 5 waves down, so you consider this wave a top, you will have a 3 waves pullback after this trace out a clear 5-wave move, so that will decide actually the next development. But I will stay still on the bullish side, looking this as a possible flat with one more move lower. On the Ethereum chart, this will actually be a little bit more, I think, different, because we still don't have a confirmation that the bullish wave count, of course, is done and that we have to turn bearish. In this case, I will look for a little bit more upside on Ether in an ABC up to 1,700, which I think is going to be the key levels, because then you will see an equality between a couple of things. Even if you consider this a flat, you will see a 3-way move, and then if we roll over, we need to look this as an X wave as well, or as a 4th wave, because we don't have invalidation in a 5th wave here, and then we will look with one more move down to sub 1,000 levels, and then continuation on the upside. So basically just a little bit less downside on Ether. Still triangle is in play if the Ether gets a little bit big, so I'm still looking at that option. But with the Bitcoin probability of moving lower, I think Ether will hold better, because when I see this Ethereum Bitcoin chart, it looks pretty bullish to me. And I do expect a little bit more upside on this chart. So this is still not completed 5-way move on the upside if we see from lows. So if I anglare this picture, and if you look at the developments, we don't have a wave count validation here, and potentially this wave 1 and 2 are developing on the Ether against the Bitcoin, and we have, I think, more upside to go, which I think will put the Ether in a little bit better position when and if this move lower actually unfolds. So that's it, guys. If you have any questions regarding that outlook, please post them in the comments. I will gladly reply. To sum up, I think that we are facing, of course, with this stock market wave count validations that we are tracking, a possibility that we might continue a bit lower, and we need to be prepared for that. Of course, I do that. I did that already for my members on our members webinar 2 days ago, and I'm still kind of levitating between a couple of options and observing what's going on, and this is just a warning of a possible outcome that we can face. So let me look all of the questions and comments. Hello, William, Lawrence, hi. How are you guys? Oleg. Hello, Oleg. Let me see if there is any requests. Can the hold down move from the last year to June low be a leading diagonal X? You have to be precise on which market. I don't know on which market you think of. I just see that S&P opened around 3935 and now 3930, so we have a 4-wave wave count validation. Yeah, that puts a couple of things in perspective, I will look for a B wave in the or an X wave in the heights of the B wave still, even if we have a wave count invalidation. I don't think we'll go so directionally downside. We will see. Always an option for that, but I usually have a stance, even if I'm wrong. It's going to be my stance. I don't like to follow sentiment. I like to track wave counts which I produce. So in general, we are facing a couple of new options as we don't see directional move up in the stock market. Yeah, okay, let's look Matic. I see there is a lot of requests for Matic. And let me look that chart for you guys. Let me just find it. Okay. I have a couple of feeds here. I think Matic is the best one that we see on this feed here. So let's look what's going on Matic. To be honest, I didn't look this chart for 2 days. Matic still holds well. So now still the bullish count is very alive. This can be a leading diagonal, but this 5 waves down can also mean either a part of a flat and we see ABC and then a reversal. So we need to be careful with all of the cryptos with this outlook. If we see a full 5 wave development on the upside, then that will be very bullish for Matic. So we will see just a correction in 3 waves on the downside and then either a same leg or more development on the upside. But if this turns out to be just a 3 wave sequence on the upside without the 5th wave development, we have to start to look for a possible event of Matic going lower. So I will address Matic when I have that. On the longer term charts, we still don't see here anything which goes against the higher time frame wave count. If you look the right look and actually the size of this correction, you either consider this correction as a complex one paired with this ABC down in a wave 4. So I'm still going to look for either a bigger ABC to the downside and then a continuation. So I don't see actually a formation of a possible all-time high here because we don't have this wave 4 is too small. It corresponds much better to the intermediary 5 waves up formation than with the primary corrections in the wave 2 and wave 4, which I think potentially, even if we have a little bit more downside, actually pairs up with this 4th wave here. So I don't think still we are going to see some sizable movement or a reversal of this trend on the upside. I do think on a higher time frame, if you move this chart on a weekly level, I still don't see signs of the invalidation of the higher time frame wave count. In the worst case scenario, I can look this as a wave A up in B, down in C, down to this previous 4th wave, which will actually, I think, behave as a support. And then in that case, as in Bitcoin, I will look for a possible turnaround on the upside. So I still don't pair this up with the possibility that this trend on the upside is done, okay? Because you don't have any alignment here that corresponds to this duration of this wave 2 development. Even if you take a 0.618, because this was a complex correction, this definitely doesn't correspond because it's too much small in time to actually correspond to this correction here. So you can also count clearly a potential 5 waves up in a wave 3. You have some fib ratios which correspond to that. So I will still consider this to be a bullish chart with the caveat, if we see these developments on cryptos, that we can see just another push down and then a continuation, provided we don't see 5 waves up here in a wave 1. So this is still an undecisive thing. As on cryptos, as on Ether and Bitcoin. So we have to take a great care what will unfold in the next couple of days or even a week in this market, because that will actually give us more clue should we take a final stance of the possible fully bearish case scenario down to 15 to 16K. So I hope that helps. Yeah, let's look one more chart, EGLD, and then we will close. Of course, if you want to see more of our analysis, you can try a membership with the trading analysis. We have a convenient trial, $27, I think, where you can test our service. We have a lot of features in our crypto service. So let me look near. From the Elliott Wave perspective. So this is not such a big chart. This is a market cap. Sorry, it's my bad. So yeah, we don't see a 5-wave development here yet. So I look this as a flat. So potentially we need to wait. Also, I don't see a 5-wave development, as you can see here. So this even doesn't qualify for a potential leading diagonal. And in that case, this will leave us with the probability that we need to consider a possible further development in near on the downside. Okay, so this is not satisfactory for the possible outcome on the upside. We might have a little bit more further upside. I don't see here a complete 5-wave development, and I don't see an expanding leading diagonal here, because the wave 3, according to the rules, needs to be a little bit bigger than a wave 1, which is in this case is not. So I will be very careful for now on the bullish development on near. And Solana also, I've been talking about this with the members. Solana also didn't qualify anything bullish on this chart. We try to have some type of a possible flat in the downside, but if that is the case, it needs to show us much more advance on the upside, and I think environment actually doesn't agree with that. In that case, I will more look for a possibility of a further downside in Solana, and maybe considering this to be some type of a flat correction, which will be a 335. This will be some type of a 4th wave, and then we go down in a 5th wave, actually challenging this previous wave 4. We don't have all data here on the trading view. I will show you that here. I think I have the whole chart on this different package. So let me look here, Solana, and what did I left here? Yeah, so we looked for a possible leading diagonal, still not, as you can see, a solid bullish case here, looking technically. So what we need to do, if we want to align this with the possibility, it's still a possibility with a little bit more downside. We have to consider this to be some type of a 5-wave move, and then maybe potentially some type of a up in B, down in C in flat, challenging this 20 for a possible 5-wave move. Of course, we will see, but current developments are slowly expiring for a probability on a movement on the bullish side, and we have to acknowledge that. I don't have anything against of changing opinion and aligning itself with the market when the time is due. As you know, usually I propose only 2 scenarios or even 1, because I don't see any use in the Elliott Wave methodology and the macro component if you are looking 10 options. So I usually, or not usually, I don't do that at all. I try to dissect and try to compose a solid outlook when I marry these 2 things. And so far we did that successfully. So I think it's a time that we address these current developments on the macro level, and also try to align that with the possible lower levels that we might see, which couple of charts starts to suggest. So I hope you you like that, and of course click the like button, subscribe. It will help us our to algorithm to see our production, and starts to maybe help it to go a little bit higher in views. That is of course helping us as a trading analysis. So I will appreciate that, and see you next week. Stay well, and keep tracking all of these warning signs that I think I pointed out on this crypto lab. So stay well, guys, and see you next week. Bye bye.